Hello from the Tukascopy studio in Geneva. For a market review from the technical perspectives, we are joined by independent technical analyst Bruno Estier. Welcome, Mr. Estier.
Good morning, Daniel.
So it's all about the current correction in the US and European equities, but why are we starting with the German yields?
We start with the German yield because really here this is the main event on the technical side. What we see here is after the pause of the last 2 weeks, we have a big rise to a new high. And that's really confirming a new high and a new uptrend for the German yield.
And does this also affect the US yields?
And it affects the US yield. It's also making a new high on the US yield. As we see, we really have first broken the main descending downtrend line. It was able to pull back to it at the end of May when we met last time, and now it's making new highs, and so it's confirming really higher highs and higher lows.
Mr. Estier, how does it affect now the equity market in the US?
Well, we'll see that here in green we have the same line that we saw before, the US 10-year yield. It's rising here, and we notice on the S&P that the S&P is coming down. So it's a normal impact. When rates are rising, it seems to impact the equity market. It was not always the case in the past, but now it's getting more obvious.
Okay, so if the support is broken, how far does the...
Yes, here we see that this support at 2085 was broken, and of course the question is how does it look like longer term? We were here at this level of 2085, we have been in a long consolidation where nothing was happening for almost 2 or 3 months. And now it's giving kind of a signals and opens the door to a correction all the way down to the previous consolidation, which was in the near 2000, near 1980. So this is this 2000 era is here, 2025 and 1980. That's about the longer term. And we see two things. People are getting a little bit nervous. The VIX is rising from 12 to 15. That's the first sign that people are getting cautious. And also the momentum of the current weekly move is gathering pace, and it's all on the way down here on both indicators.
Do you have a confirmation for this correction from other industry sectors?
Well, the worrying thing is that those sectors which were holding well, and we see, for example, here technology, that the technology relative to the S&P 500 was rising in the past, recently is now also turning down. That means they are underperforming. That means the strong mans are now getting weaker. And also on the sector itself, we see that it's broken different rising trend lines and with a downside momentum. So it's unfortunate, but it will also goes together with the bad guys on the way down. Also, if we take typically a healthcare sector, which is usually a defensive sector, which relative strength should be rising during a correction. It's not the case, it's flat. So that means it's moving the same way as the S&P 500, so it's also undergo a correction. So there is no place to hide.
So does this also affect the European stock markets, equity markets?
Well, that's unfortunately the case. We see here since June really declining days almost every day, closing on the way down with black candles. We are below the cloud here. We have moved below the 20-day moving average, the middle of our Bollinger Bands. We have even broken the Bollinger Bands. So all of that is no good news, in fact.
And we also always highlight the emerging markets. The markets in Asia didn't seem to be affected so far.
Yeah,
so
maybe just before here we looked at the weekly chart of the Euro stocks, because here there is one line which I added on the weekly chart, which is this very long-term descending trend line. That's the one we gave us the signal to go long because we broke it. And now it has been tested twice, once in the end of April, and this time it's a little bit more serious because we are closing below it. So it's really reopened namely the area where there was a previous high around 3,300. So that's about the target for this correction.
So if we have a look to our markets in Asia, so how are they impacted?
So far, we had the chance to believe that they were somehow immune. We see that it was just a sideways correction. Unfortunately, in the last 3 weeks, we are holding on the low of this trailing range. And it's just about ready to break with a downside momentum, which is really now present. So the risk here, for example, for China is to go back all the way to the previous correction, and which is far away because there was a big surge up. So here, probably investors should be cautious and put stops relatively close below the bottom of this trending range.
And how does the situation look like in India?
India was a little bit weaker. We had hoped that the correction was finished already at the end of May. Unfortunately, the rebound is relatively mean, not so large, and now it starts to move back down again with oscillators, momentum turning down, so it's no good news so far. And the relative strength versus the S&P is flat. That means it will correct the same way as the S&P.
Mm-hmm. And if we finally also look to Japan, to the Nikkei, it seemed to be a safe haven.
It used to be a safe haven because the yen was weakening and it was helping the exporter industry. Here we see that we are still within the nice uptrend. However, after making a new high around 20,700, we broke back below the former high, 20,300, and now we are around 20,000. We have to realize that there are two things. Number one, it's not a rising relative strength. That means the ratio or the outperformance of the Nikkei is now slowing down versus the S&P 500. And secondly, it's also under the influence of some negative momentum, which is a little bit toppy and could push through the trend line that we have here. So the risk to see 19,000 from the 20,000 is still open. That's probably meaning that everything is under a little bit a cautious warning, and this month of June could be a little bit worrying for investors.
Thank you, Mr. Estier, for being here today and sharing this analysis with us.
You're welcome.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.